Volcker and make it less burdensome.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Menendez.
Thank you, Mr. Chairman. Thank you all for your testimony. Chair McWaters, let me ask you, there are more than 300 credit unions that have been certified as CDFIs. Community development credit unions like the North Jersey Federal Credit Union and Totowa, New Jersey have stepped up to supply banking services in underserved neighborhoods and communities across the country, the very communities that President Trump said he wanted to help. And in terms of doing that, the CDFI fund is critical to those credit unions that work in low-income communities. So do you believe that Congress should eliminate the CDFI fund as proposed in the President's budget?
No, I do not. No, I do not.
I appreciate that because the Treasury Department released a report just a few weeks ago that said, quote, CDFIs are often the only source of credit and financial services in impoverished urban and rural low and moderate income areas with limited access to the banking system. So it defies their own logic, and I'm glad to see you share the view that it's critical to maintain the fund. Chairman Gruberg, the Treasury report includes recommendations to reform the Community Reinvestment Act examination process and rating system. The report argues that the CRA examinations play a role in preventing certain banks from merging and opening new branches. What's your view of this argument?
First of all, Senator, a CRA is an important statute that encourages banks to meet the credit and basic banking services needs of all of their communities. So the function it performs is a very important one. Most institutions, as you know, get satisfactory or better ratings under the CRA. There are authorities for local organizations to raise issues when an institution seeks an application for a merger or other activity. That's part of the statute. That happens in relatively few cases. So as a general proposition, I don't think it's a significant impediment.
So most of them receive satisfactory ratings, therefore that shouldn't impede mergers of those who desire to merger.
The local organizations still have an opportunity to raise the issue, but in terms of actually impacting significant activity, I don't think it does.
I appreciate that response because it seems to me that the administration should be focused on ensuring that the evaluation and rating system is holding institutions accountable in providing equitable access to credit rather than focusing its efforts on weakening the Community Investment Act. And frankly, it's a little difficult to take seriously the recommendation of the Treasury Secretary when his only experience on the matter is running a bank that so struggled to meet its obligation to provide equitable access to credit in and of itself. Governor Powell, let me ask you, just shy of 9 years ago, Lehman Brothers filed for a bankruptcy, the largest bankruptcy in history, one that sent shockwaves throughout the entire financial system. In short order, numerous other entities failed, leading to unprecedented support from the U.S. government and taxpayers to bail out the institutions that had been playing fast and loose without guardrails and subjecting Americans' hard-earned savings to unjustifiable risk. It became abundantly clear in that moment that we needed a process to deal with the adverse market effects of the failure of a large, complex, and interconnected financial firm. In response, we created the Orderly Liquidation Authority, Title II of Dodd-Frank. This process, thankfully, hasn't been needed. But if it were to be utilized, it is designed to protect taxpayers and the market at large by ensuring that the burden of the failure falls on the owners and managers of the firm, that you don't privatize profit and collectivize risk. Do you agree, Governor, that this authority to resolve firms whose failure would present a threat to U.S. financial stability is critically important?
I do, Senator. Working with the FDIC, we've made a lot of progress under Title I, but I think it's absolutely essential that we keep Title II as a backup.
And Chair Greenberg, you have anything to add to that?
I strongly agree with that. The Orderly Liquidation Authority really is the last recourse, but a critically important backstop to assure an orderly failure even of a systemic firm, and as you point out, Senator, to assure that the stakeholders in the firm, the shareholders, the creditors, the management of the firm are held accountable.
Finally, the Federal Reserve Bank of New York highlighted in November that there's been an uptick in delinquency rates on auto loans made to borrowers with subprime credit scores. I'd like to hear from each of you your thoughts regarding this trend. Is this something that you're concerned about? I see it going since 2013, 90-day delinquency rates, major borrowers with some subprime credit scores has risen by more than 40%. Is that an early bird warning here?
Well, Senator, our agency has been tracking this since about 2014, and we do notice an uptick, and it's something that we're certainly making our regulated entities aware of to keep track of.
Is there something we should be doing?
Well, I think, look, our job as regulators is to watch and manage credit risk, and we have to flag where we're seeing increased risks, and this is one of those areas.
Thank you, Mr. Chairman.
Thank you. Senator Heitkamp.
Thank you, Mr.